Hey everyone, welcome back to Market Pulse, where we break down the big picture without the jargon overload. Today, we're diving into what December 2025 might hold for global markets. With trade tensions simmering, inflation refusing to budge, and crypto whispering about an alt season, is this a time to buy the dip or brace for impact? We'll cover macro trends, geopolitical wildcards, and when those altcoins might finally shine. Stick around and let's unpack this together. If you're new here, hit that subscribe button for more insights. First off, let's set the stage. Global growth is cooling, but not crashing. Projections from experts like JP Morgan and the World Bank put 2025 GDP at around 2.3 to 2.7%, down from stronger 2024 figures. Why? Tariffs, policy shifts, and that lingering inflation. But hey, no recession in the base case. Recession odds are hovering at 40%. That's the glass half full view. Breaking it down regionally, starting with the U.S. economy might slow to 1.3 up to 1.6% growth thanks to those tariff impacts. The leading economic index dropped 0.5% in August, hinting at softer manufacturing and jobs. Europe, a modest 2.4% pickup helped by ECB rate cuts. China at 4.8%, battling housing woes but buoyed by stimulus. And emerging markets, they're at about 2.3% in the second half, with Asia leading, but trade drags pulling them back. Inflation's the sticky part. U.S. CPI hit 3% in September, up a tick from August, mostly from gas prices. Core inflation's holding firm above targets, and tariffs could push it higher. Worldwide, OECD inflation's at 4.2%. Not runaway, but enough to keep central banks watchful. Markets are betting 67% on a 25 basis point trim, but the government shutdown's messing with data releases, like October CPI. Emerging markets are easing too, with more cuts expected. If rates drop, it could juice equities, but sticky inflation might force a pause. Okay, let's talk geopolitics, because markets don't exist in a vacuum. Tensions are the big wild card. U.S. China trade? There's a 90-day tariff truce, but escalation could act like a tax on households, spiking costs. Middle East conflicts? If things heat up with Iran-Israel, oil could jump to $120 up to $130 a barrel, though that's low probability. Russia-Ukraine keeps energy and food volatile, and don't forget cyber risks or climate disruptions, like extreme weather hitting agriculture. S&P Global lists top risks: energy security, U.S. China ties, cyber attacks, and deglobalization. Populist policies and protectionism are reshaping trade, potentially bursting that AI bubble in tech stocks. Yields could rise, and fiscal strains might emerge. But on the flip side, if tensions ease, we could see a relief rally. These aren't just headlines, they affect real people, from higher gas prices to job shifts in manufacturing. It's why diversification matters. Shifting gears to crypto, because who doesn't love a good alt-season speculation? Bitcoin's been on a tear, but forecasts see it stabilizing, maybe BTC hitting 168K by year-end. Altcoins could steal the show if BTC dominance dips below 54% and volumes spike. Signals suggest late November or December kickoff, driven by rate cuts and FOMO in sectors like AI tokens or memes. But the fear index is at 29, so caution. Some say Q1 2026 is more likely. Historical patterns? Alt seasons follow BTC peaks, lasting weeks to months. Watch ETH aiming for more than 5,000 USD or SOL for gains. Korean volumes are down 80%, signaling broader hesitancy. But if sentiment flips, inflows could surge. So what does this mean for you? Equities like the S&P 500 might hit 6,000 on AI hype, but watch for corrections. Favor AI stocks, gold to 3,675 ounce, and EM bonds for carry. In crypto, hedge your bets. Alt season could spark, but fear might delay it. Overall, December looks cautiously optimistic if tariffs cool and data clears up. But risks tilt down, so build those hedges. What do you think? Bullish on alts or playing it safe? Drop a comment below, like if this helped, and subscribe for updates. Thanks for watching. Stay savvy out there.